The year 2024 was full of ups and downs. And now that it's 2025, we can look back and reflect on what happened, as well as look ahead. Your host, Terry Wheeler, is with me, Patrice Sikora, to consider the past 12 months. So, Terry, did stocks behave as you expected last year?
That's the question I think everybody should ask right now. So hello, Patrice. Happy New Year. I know this is the first time we're getting together.
That's true.
And hopefully all our listeners had a great holiday season. We think it's really important not to time the market. Now, if you really are honest with yourself and you think back to January of 2024, how many of us thought the market would be up as much as it is? So we're going into a very contested election, a very divided country. Inflation had been just rampant, and we had interest rates that were not really cooperating. So going into 2024, I would not think that the S&P would end as it did, which I think we're at 23.31% up. The NASDAQ surged over 28%. So we had, I think, 57 record closings. So I guess the short answer would be no, I would not have expected this.
But wasn't that concentrated in a couple of stocks?
Very much so.
Yeah.
So when you dive deeper in the numbers, which we're going to do a little bit today, there are problems out there. Some are mega problems that, as we talked about in prior episodes, it didn't matter who won the election. They're inheriting a mess. So there's going to be some big challenges, but whether or not that means the stock market's going to go up or down can be different. So if they stimulate in a way that helps Wall Street, which is a lot of what happened last year, you're going to have stocks go up, even though Main Street may not be feeling so good. So we're going to talk about what it looks like going into 2025, how to stay engaged, but perhaps put some defense in place, because I think that was very important last year. And I think it's going to be even more important as we go into the next 12 to 24 months, maybe even 4 years.
Now, before we move on to the trends, there's an area that I know you like to talk about, crypto. How did that go?
Well, I started as a complete non-believer, thinking it's just garbage. And then we did an MIT course on it. We really got into the technology, and we've been following crypto, and some of our clients have exposure, very small amounts, but crypto absolutely soared. Right. And we know the Bitcoin recovered to near its previous market highs, which when cryptocurrencies crash, they can crash 80-90%. So it's not for the weak of heart. But Bitcoin was up over 150%. We had some other smaller ones that we track that we think are quite good that were up much higher than that. So crypto had quite a rally. And as we sit here today, crypto has pulled back a bit, but that's normal. And we'll just see where it goes. But one thing we do know is it's going to be a wild ride. And that's par for the course for that particular asset class, which, again, we like following. We think the technology has a lot of application, but we believe it should be a very small part of your portfolio. And for a lot of retirees, they don't touch it at all.
All right. Well, let's look at the trends that you saw last year. Talk to me about that.
Yeah, some of the key kind of not necessarily financial trends. So let's talk about some fun ones and some financial ones. It's hard to record this today without mentioning what's going on in LA. Oh, yes. I think as of this morning when we're recording, there's over 10,000 structures have been destroyed. 10 people, I think, are the confirmed deaths. Right. And just absolute devastation. So I just wanted to mention that, because listening to the radio coming in to record this and just seeing the pictures, it's just devastating. Last year, from what happened at that point, or through 2024, we did have a lot of major things. We're not going to hit on all the catastrophes, but we did have some hurricanes, major flooding in Spain, a lot of things that happened there too. But on the financial side, we had some things happen like pandemic handouts. They have been burned through. So that really stimulated our economy. 2.1 trillion of pandemic savings have pretty much gone away. So we are now at a point where that's not going to stimulate the economy going forward. So the boost that all of the government spending, some of which was probably very necessary, but it's gone. So that's no longer going to be a tailwind. kind of pushing our economy forward and pushing the stock market up. So that we cannot count on anymore unless we have it happen again, which hopefully we don't. So that was one of the trends that as 2024 ended from a financial standpoint, we really need to realize that positive impact is now gone. And then some of the ones that I think we all are aware of, but that have really taken hold is communication. Podcasts, as an example, podcasts are 7.85% increase.
Yeah.
According to one side and listeners. So that's interesting. So does that mean I'm going to get, instead of my 10 listeners or 100 listeners, I'm going to get 0.7 or 7 more?
Stick with it, my man. You will.
No, we're growing, which we're happy about. But listenership is growing, consumption is growing. I don't know if you, Patrice, are part of that, but I've found I listen to podcasts quite a bit in a lot of different areas.
It depends where I am, but yes, I'll listen at the gym. I don't really listen in the car. I would prefer news in the car, live news, radio. But I listen at the gym all the time.
Yeah, that's my favorite place too.
Yeah.
I have to listen to it outside of the gym too, because I don't go as often as I should.
Well, there is that.
So sometimes I'll go to the gym and I'm like, boy, I got a lot of catching up to do on my podcast. That is my favorite place to see them too. But the increase in communication coming from other than mainstream media has really taken hold. And I think a lot of that is just the lost faith and trust that mainstream media has brought about upon themselves. So they've been pretty much tabloids. And that's on both sides. You watch Fox News and it's just to one extreme. You watch CNN and CNBC and it's just another extreme. It's like we're living in two different worlds. They just wrap up their message and use the news to give their message. And it doesn't really matter what reality is. So if you can't tell, I'm not a big believer. I watch BBC probably more than a lot of the others. But I think that's
on the car too, BBC.
Yeah, I think they just lost faith, and I think they deserve it. Quite frankly, I think they abused their position. They were very biased on one side or the other, and it's become shock jock type news because they have to get eyeballs. So I feel for them because they have so much competition, but they've destroyed their credibility by trying to get eyeballs. That's really taken hold in 2024. It's been a multi-year process, but with the election and with people coming out, I mean, Facebook is now coming out basically blaming their fact checkers, but admitting they've been manipulating things for years. They're now going to move some of their key things to Texas out of California. Facebook, for crying out loud, like that's crazy. So there's a lot of things happening that is really ramifications of this, as well as the election was a ramification. I think most people could see it right in front of their eyes, and they're tired of being lied to. Science, I would put in that same category. Science, trust levels in science, just talking to people, it's at a low because, again, they abused and politicized it. Instead of telling us the truth and treating us like adults, they made up science. And they are going to be paying the price for years, and the American public is going to be paying the price for years, because when real science is out there, now how are we going to trust it? How do we know if it's real when the government is propping up people that are calling things science when there's no scientific backing for it? So this is something that I think is very negative in our society. And when people turn to things like Facebook or X and they try to get their news, that can be dangerous because there's real news on there. I think X is the number one source of news now, but there's also a lot of garbage on there, and there's a lot of AI generated stuff, and you don't always know if what you're reading is real or not, or if the videos are even real, because you can fake videos now. So this is a trend that I think is very bad for society, but it's here. It's probably here to stay because AI is going to just get better and better, and you're not going to know if we're really talking or is this AI. So right now you can tell. And I'm not smooth enough. AI will probably be much smoother.
Well, let's move on to something onto something that's much more positive. The debt, the federal debt.
Yeah. So the federal deficit. Now, this is something in our next episode, we're going to talk about the election results, not from a political standpoint, but really from a what can we expect? What could potentially be good? What could potentially be bad? Well, this is one really terrible thing that it didn't matter who won the election. They were going to inherit, which is a massive, massive level of debt. Now, many economists think we've already gone over the proverbial cliff and we're not going to be able to recover. And it's going to have to be painful in order for us to get our financial house in order as a country. Now, if Trump, in my opinion, does a lot of the right things, that's going to be very painful for everybody. And he'll get blamed. But if he's got thick enough skin and he does what's good for America, as he claims he will do, it's going to be painful for America. Because we have far too much debt as a country, and we are losing faith as the currency of the world because of that. So the U.S. federal debt is up to 36.1 trillion. It's up higher than that as of now. This is the end of 2024 roughly, and that's a 2.1 trillion increase over 2023. So the debt is growing and growing, and the problem is as interest rates go up, we will spend most of, if not our entire annual budget on servicing our debt if rates get out of control. So this is a massive problem that they're going to have to tackle. And the question is, are they going to be serious about it? Or are they going to punt like every other politician? Yeah. So the last administration clearly completely punted. They didn't do anything to take care of this. I would say Trump in his first administration didn't do much to take care of this either. So ultimately, the spending has got to get under control in order for us to keep our place as having the U.S. dollar as the world currency, or we're going to ultimately lose it. And that trend has already started. So that's a tough one. Another just fun one just to work in here is not fun, actually. It's about death. But deaths have increased in the United States for the first time since 2021, which we all know what was going on in 2021.
Right.
So we have a interesting phenomenon going on in the U.S. where birth rates are actually down and now deaths are up. And that shouldn't be surprising with aging of America. But the birth rates being down means that our population without immigration will decrease. And that's generally not good for growth. So we'll talk a little bit about immigration, particularly in the next episode. But immigration is something our country needs. It's part of our foundation. We just got to be smart and legal about it. But with that said, it's going to be needed. But we're not the only country in this boat. So you're going to have other countries that are going to want immigration also, and they're all going to be competing for the right kind of immigration or the right mix of immigration. So that'll be interesting to see how that unfolds into 2025. But immigration, of course, was a huge topic in 2024 and one of the biggest topics that I think swayed the election.
Real estate, homes, usually that is considered an individual's largest asset, a home. Home prices have just skyrocketed, though.
Yeah. And it's interesting to look around the country and places that used to be cheap to live, and they're not cheap anymore either for the most part. Average home sale prices have gone up to roughly $500,000.
That's the average?
Average. So the median, meaning when you look at kind of what the middle level of homes being bought, it's 420,000. So you do have areas that are going to be much lower. California is going to be higher. So California, 500,000 doesn't buy you much.
Can you imagine what it's going to cost to replace those homes that were destroyed, businesses that were destroyed in the fires? Yeah,
and inflation, unfortunately, in construction was massive over the last several years. So it's going to be very, very expensive, and there's not enough tradespeople either. So that's going to even drive prices up higher. I had an interesting kind of experience. My daughter plays volleyball, and I was at a volleyball tournament where she had to be there for like an hour and a half before her first game because they had to ref. So I went over to my old neighborhood where I grew up because her game happened to be in that area. And I drove around. I took a few pictures, and I send the pictures of some of my friends that I still know from childhood. I sent them pictures of their old houses. And then I got on Redfin, which I often do to see prices. I should post a picture on the YouTube version of this to see my old house, but we bought it for, first one I think was like 18,000. And then we moved across the street for a house for 40,000, which was all the money in the world, to my mom, who was a single mom working for Pac Bell. That home, they said, was worth over $400,000. That home, it's not impressive. It is, we were lower middle class, military area. It doesn't look like it's changed since I lived there 30 years ago. It's crazy how much those values have gone up.
Wow.
And to be honest, that scares me a little bit about real estate, because once things normalize, right now we have a housing shortage.
True.
But once things normalize and supply and demand is back in balance, or if what normally happens is they overbuild and overcompensate, then that would mean we could have some troubled times ahead potentially for real estate. So there's a lot of inflationary things for real estate happening too. So I'm not necessarily predicting a big crash in real estate. I do think a pullback is in order, but I don't think a 2008 type crisis in single family homes is likely. I do think some of the other commercial areas are more at risk. But average home prices are up. Number of homes on the market is finally starting to get higher. So we are starting to get more supply, and that will allow for some downward movement probably in prices, unless inflationary forces end up being stronger than most people hope.
What else do you have on tap here? This is good. Keep going.
Yeah. So the other thing we want to look at, getting back a little bit to the economy, is what happened last year as far as where did people put their money? What does that tell us about 2025? So we had over 600 billion of inflows into global bonds. So we had money moving into bonds, but you combine that with money market funds and savings, which finally started to pay some interest. That was over $1 trillion. So there's a ton of money in kind of now bonds can include high risk, or what we used to call junk, and now we call high yield. But most of the people and most of the money is going into really the safer treasuries, high grade corporates, things of that nature. So the money was sitting on the sidelines out of both, because remember, when interest rates rise, bonds go down. So the bond market is starting to say, hey, interest rates are not necessarily going to go down. Most people think they'll trade in a narrow corridor for the next year or so. And it's safe to go back into bonds and get some yield. So that's one of the trends. And then stocks drew in another 670 billion of inflows, as indexes really across the world have gone up, with the United States, for the most part, leading the way. So stocks have gone up. I would have thought last year we were probably closer to the highs than the lows, and it went up a lot. This year, I feel, quite frankly, very much the same. So I'm worried very much about a pullback, which is very overdue. But every time we've had a pullback, we've had the Fed or government forces step in order to prop the market up. So they call it the Fed put. And the question is going to be, in this new administration, are they going to do that, or are they going to let free markets be free markets? Now, it's easy for the Trump administration to say, yeah, we're going to let free markets be free markets, but they're going to be blamed every time that happens, because people don't like to see their 401k drop. So will they have the backbone to do what maybe is best for the long term? Or will they continue to do what politicians have been doing the last 20 years and just prop it up every time, which, especially since 2008, that's exactly what's been happening. The way the economy works, we need recessions. We need pullbacks. They're healthy for the long-term economy. We need recessions. So the key is, if that is allowed to get back to normalism, capitalism, then we have got to make sure we have some protections in our portfolio, because if nothing else, it's going to be a volatile next 4 years. And I would say a volatile next 12 to 24 months. So having downside protection, which we've talked about how to do that on several of our podcasts, very important to do that. The idea is put that defense in place before your stock market portfolio crashes. It's really weird. We do a lot of protection in our strategies and our focus on how we do equities. And it's amazing how much your phone will ring and clients want to move over, and they want what you do after the market has already crashed.
Right.
We've already experienced the pain. You got to do it now while you're on a high and while you feel like your advisor's doing great. Because the reality is, you won't see if your advisor's doing that great until the market crashes. And if you crash with everybody else, it means they're not playing any defense. So very much a time to put defense into your portfolio. And the money flows are showing that there's risk chasing stocks. Now we look at another area, which is, we call it well, not we meaning Terry, but the industry looks at what is the dumb money doing. Mm-hmm. And the dumb money is you and I, meaning the dumb money is individual investors versus institutions. And we track what are they doing versus what is the dumb money doing. And when the dumb money gets aggressive and the institutional money pulls back, you got to be careful. And those trends are already happening. Okay. So you got to be careful. Now that can switch very quickly because everybody's waiting to see what Trump administration is going to be able to get done. But I think caution is going to be the tale for 2025. But if you time the market and try to just get out, and if they do some of the good things they're hoping to do, you could see this market go up and you can miss out. So you don't want to miss out on the big trading days because that's where most of the movement is. So just have defense with some of your equity strategies.
And you've talked about those trading days, the trading days. If you miss one, you may have missed huge percentages of gain. Yeah.
There's some studies going. I think it's something like if you miss the top 5 or 6 trading days of most years, then your portfolio is down, not up. So that's, don't quote me exactly, but that's the gist of the stats. We could pull that up maybe for the next podcast, but
I think you've had it before, but yes, I think we should.
Yeah, you got to be really careful.
Yeah.
So looking forward to 2025, we know that the Trump administration is coming in. We know that they have control of the House and the Senate, but it's slim margins. And sorry to all those Republicans out there, but Republicans, there's a lot of crooked Republicans as well as Democrats. So they may say they're all going to be one team and they're going to get things done and make the hard decisions, but will they really? These old school Republicans, they're part of the problem. So we'll see if they get it done. Last time around, if you remember, a lot of them conveniently voted against their own party. And a lot of them kept the power in the hands of the politicians. So are they really going to let go of some of that power? Are we really going to, potentially get a situation where maybe these politicians like Nancy Pelosi can't live in politics their entire life? Maybe we actually have term limits, which is probably one of the best things we could have for America, because these people they don't answer to us anymore. That's clear. So will we have real change or not? We'll see. I'm not overly optimistic that the Trump administration will be able to get done what Trump wants to get done, because the politicians are going to protect their own pocketbooks and they want the control and power. They don't want that guy sitting in the White House to have the power. And if there's one thing we've learned the last 4 years, the guy in the White House wasn't the one pulling the strings. We all know that he was a little too old. He was a little too senile. He's not the one pulling the strings, and probably thankfully. But the idea that the president isn't actually the president is pretty scary. And even his own party is sort of admitting it without taking any responsibility. So it's pretty bad what happened the last few years. And then diversification. We know this is absolutely critical because volatility is likely to be a part of our life again, more than it has been recently. So right now, we have things that are on sale. So you can hedge your portfolios far cheaper than a few years ago. So bad. I have one investment that I am replacing, and I have to incur a hit in order to do it. But I'm able to replace it with performance that's almost 50% higher, and it's guaranteed on the downside. And that's not because of specials they're running or anything else. It's just where interest rates and volatility are right now. So with rates up and volatility down, we can hedge portfolios much, much more effectively. So it's a great time to buy defense. It's a great time to lock in guaranteed income if you need that. The question is, how much time do we have? So it is important to move and take advantage of these things. Another, I think, big lesson we learned in 2025 from the investment world, a lot of psychological studies are done as to what are investors after. They very much want downside protection. They don't want to live through another 30, 40, 50, 55% drop in the stock market, because retirees, they just can't handle the recovery time that is necessary for many of them. So again, defense, you can't manage your money the way you did as you accumulated when you're in retirement. You got to have some defense. So people want it. The studies are all showing downside protection is something they need and they want. BlackRock, interestingly, came out with a study that basically admitted we need at least about a 15% what's called a volatility buffer, which is another way of saying downside protection in all portfolios. I mean, 60-40 portfolios are dead. You need volatility buffers and things like that. And then I mentioned that the rates are favorable for things like we mentioned deaths were up earlier. So if you're going into some things that are index-based life insurance policies, those actually, you could lock in very good rates if you do the right products now, if you need life insurance. So it's a good time from that standpoint if you need permanent life insurance versus term. So of course, there's a whole discussion around should you do term versus permanent, and it depends on your situation, of course. But if you do need more permanent insurance, it's a good time to buy and potentially even to upgrade policies. Same with if you're in the annuity world for fixed income that's guaranteed that hopefully can get a little better than where interest rates have been. It's a very good time to get much higher participation rates, much lower fees. We reviewed one where we can save over the next 8-9 years over 10% just in fees, and we would get higher participation. And we're picking up, I think it was close to $80,000. It's a larger contract by switching it. If we switch to the identical product today that they had, I mean, it's an absolute no brainer. So there are key things that you got to make sure that when you buy things like that, you don't just buy it and the salesperson moves on. You got to look at them, because now is the time where you can upgrade, potentially depending on when you bought. So depending on the year you bought, you may or may not benefit, but it's something important to look at.
Now, the last couple of years, Roth conversions have been a huge topic. Is that still something people should be looking at?
So this is one that the prior episode we did on tax planning, I encourage the listeners to listen to, because this is a long answer. For Roth conversions, the key is we have time now. So I think most people believe that the current tax act, which was set to expire at the end of this year, and everybody's individual taxes were going to go up. Mine, ironically, so there are people kind of in the middle that are usually business owners that live in California where you can't deduct all the taxes. Our taxes went up with the Trump tax act. But for most people that they said taxes weren't going up or were going to be hurt by it, they actually save money. So that's another area where the politicians lied about the Trump tax act. You clearly saved taxes for most of Main Street America, and they were going to go up this year. With Trump being in charge now and with this House and Senate, that is most likely going to be extended. So I'd give that around an 80 to 90% chance. So I think we probably are going to have much more time to do conversions at the lower brackets that we've been enjoying since that act was put in place. And then the question is, does it get even better? And that's a much tougher question, because we have a massive deficit and massive debt to deal with. So lowering taxes isn't necessarily going to help that right away. It puts even more pressure unless they can cut costs and raise revenue. And that is top down versus bottom up approach. And economists argue as to which is better, but there's challenges there. So I think you have time for Roth conversions, but there's some other more powerful strategies depending on your financial goals that may be better than Roth conversions anyway. But ultimately, Roth conversions, I think we have time to do it. And when it fits, you definitely should be doing it. So I think we're still at a low in tax brackets, and someday taxes are going to go back up. Will it be the next 4 years? Probably not. But after that, who knows who the next administration is and who knows what shape our economy. So taxes can't stay this low, more than likely anyway, forever. So we're definitely in low tax brackets. So it's good for Roth still. You just got to compare them to other approaches.
You've covered a lot of ground here, Terry. Is there anything you haven't touched on, though, that you still want to mention?
Probably all kinds of things we haven't touched on, but we don't want to keep the listeners too long. We just want to hit on a few key things, a few key trends that we saw, and a few key facts or fun facts. So this is just kind of a fun episode. I enjoyed talking with you on it, but I think those are the key ones we did want to cover. And we'll look forward to what's going to happen in 2025. And we're going to talk about a lot of interesting subjects coming forward that will help you protect your portfolio and hopefully grow it.
All right. So how can people reach you, Terry?
So first of all, I never ask people to like and subscribe our podcast. Please do that. And the next episode you will want to hear, because it is all about what we really expect based on the agenda for Trump. And we're going to talk about what could go wrong, and we're going to talk about what could go right, and give you some hints as to what to do in order to protect yourself. And then you can reach me, of course, at our website, which is www.weriaadvisors.com.
All right.
And of course, you can just call us at the office, 916-325-0130. We'd be glad to hear from you.
Well, as Terry said, remember to subscribe to his podcast, because we are on the road through 2025. Terry will have insights and observations, and of course, share this podcast with others as well.
I was going to say, if you're like me, get to the gym and listen to these podcasts.
That's right. That's right.
New Year's resolutions.
You can do it while you're cooking, too.
Absolutely.
All right, folks. Take care.
Thank you for listening to We Money Talk with Terry Wheeler. Be sure to click the follow button to be notified as new episodes become available. Information presented is for educational purposes only. No listener should assume that any discussions or information presented serves as the receipt of or substitute for personalized advice from We Alliance Wealth Advisors, Inc. or from any other investment professional, and is not intended as an offer of solicitation for the sale or purchase of any specific securities, investments, or investment strategies. We Alliance Wealth Advisors, Inc. is not a law firm or accounting firm, and no portion of this podcast should be interpreted as legal, accounting, or tax advice. Information expressed does not take into account your specific situation or objectives and is not appropriate for every individual. Listeners are encouraged to seek advice from qualified tax, legal, or investment advisors to determine whether any information presented may be suitable for their specific situation.